Hello and welcome to Market in a Minute. June the 19th, 2025. Asia Pacific markets are flat down again because there is no let-up in the uncertainty spreading out of the Middle East. Fears of imminent US participation in the Iran-Israel war is keeping markets in a very tight grip and full of uncertainty. The KSE100 index is also down 463 points, and that too after a gap up at the opening of more than 600 points. So what's happening? Let's see. So this is where the market rests right now. Clearly, it has not recovered from the shooting star that was formed on July the 12th. It's been down since then. The next crucial levels will be 40. But first, to get an idea of what's happening, let's look at the hourly chart. This is the first hour's activity. Even though the market gapped up sharply, this is a 637-point gap up, and the market still closed 463 points in the red, which shows very bearish sentiment today, springing mainly from exogenous factors, i.e. the war in the Middle East and the increasing likelihood of US participation in that war. But first look at a few points. RSI break below 60 means the next level to be tested, if it keeps falling, will be 40. A break below 40 would be very telling because that would mean officially, momentum-wise, you would be in very bearish market territory. Let's look at the 3-hour chart. On the 3-hour chart, the market fell below the 50-period exponential moving average yesterday. Rose above today for a bit, then fell below it again. Going down even further, let's look at the hourly chart now. It broke below the 50-period moving average a few days ago, broke below the 100-period moving average yesterday, and found support at the 200-period exponential moving average today. This is a very important level right now because once again, the market has found very solid support at the 200-period moving average, exponential moving average. If you remember the daily chart, the market found a very strong support at the 200-day exponential moving average here on the 8th of May. It has since not broken below any of these important moving averages on the daily chart. But now on the lower charts, on the 3-hour chart and on the 1-hour chart, it is now starting to move below those levels. These are, of course, exogenous factors, not inherent, not central, not fundamentally central to the Pakistani market. Nonetheless, they are affecting the Pakistani market like they're affecting other markets in Asia Pacific and all over the world. Right now, extreme caution is advised. There is still a very high risk of US participation in the war, which means more uncertainty, especially for the energy market. Go into the market right now only if you like catching falling knives, as they say in the world of financial markets. Otherwise, it's best to wait and watch until the storm rides out. And this is one big financial market storm, in addition to a political storm and a security storm. Thank you.